Good morning, everybody. Hope you had a great weekend. So markets are consolidating here a bit, normal after last week's run off of the lows. Buyers all over themselves to get back in, even things that were broken down. So S&P's up here at resistance, and SPX day. If the market gets some legs, which is possible on either side, I would think the upside is less likely since it was up several days in a row. That just seems common sense, but there's no correction bar. Friday was a resting day. It was an inside day. So typically you'd have more resting days. And, I'm just thinking maybe an iron condor makes sense. Maybe it just chops back and forth. But if one side goes one way, at least the other side, um, you'll have the gains there. So, of course, the worst would be a shakeout in both directions, but getting far enough away. So the question is, what's far enough away? This premium up at 39.80, which is a decent distance away, up here, especially after it's starting to consolidate. There isn't much. You can get a little bit after that. And on the downside, I've got 38.80, 38.90, and 38.85. So you've got the protection of a whole number. There isn't a lot of support here. Just looking to the left, there isn't much there. And 38 is just nothing at 38.60, which is where I'd have preferred to be down there. So it's not a no-brainer as to where things are. You can see now they're up a little bit. Market's trying to feel its way out here, which is probably going to be consolidating, chop back and forth. So, yeah, 3,900 is strong. So I said 38.85, getting underneath that, down here could be okay. It's 3,900. It's a logical place. There's a good open interest there. And I would want to be below that. So, and it's not where some mornings where we look and at different levels, there are different pivots or consolidations and high open interest and lots of reasons to think that prices can't get beyond a certain point. And there's a lot of that here. So maybe trade a little bit smaller, get as far away as possible, manage accordingly. Yes. Yeah, exactly, McGraw. There's no juice at the safe levels. Yeah. And for those of you on like Glenn is here every morning about SPX, Glenn McGraw is suggesting do Wednesday and get even further away. But you don't have the luxury of knowing what's going to happen before Wednesday, but that becomes a personal choice. So you just look at it and say, well, if there is premium, you can get so much further away. It could work out. All right. So as you can see, markets are going nowhere here pre-market. They came up off of the lows yesterday on Friday. They're in between this area here and just chopping sideways. Areas of support and resistance and smaller time frames things are getting tighter together. Could be what we call a frog in a blender type of day where the markets just chop back and forth looking for more information or just digesting the gain. I mean, look, you had this big reversal down here, big wide ranges, and then it runs right back up. It stalls. You can see the topping tail here. It stalls there at resistance and goes again and stalls. And so would make sense for it to just grind around for a couple of days and digest the move up. So IM has been the leader, not always the case. And, looking back, with the hindsight of what happened, doesn't make these ranges look small, but at the time, of course, compared to this, they were gigantic. And a move like this that ignites from these wide whippy ranges, whereas it's not even a classic W bottom, but it just went down in just these giant reversals. The little stall there at the high and up it went. So now it's just stalled here at new all-time highs. You can see it's pulling back, and similar to the S&Ps, obviously was stronger. Boeing, which was a big mover last week, and a couple others. There's a lot of stuff that just helped it along. Not like the trends look like they're going to go that much higher. With Boeing, well, maybe it's a little ahead of itself here. It just look at the pullback and the move, and it doesn't have any significant resistance till up here. So, well, it might pull back a bit. It's up here pre-market, but it's just a pattern that suggests it should be able to go higher. So that'll continue to help. And UNH and some of them, it didn't do a heck of a lot, but it did its part last week to try and help the cause. And Apple, just did nothing. So Apple's going to have to help out a bit here if it's going to do that, with tech that's just unloved for now. That just continues to march its way higher. And technology, we've got these sell setups everywhere, and Qs are up for the moment. But it'd be interesting to see whether this goes sideways for a few days. And if it can, I suspect, that might support a bias that, some are saying that the S&Ps can hit 4,000. Well, if tech holds up and Apple joins the party, well, which is most heavily weighted stock in the S&P 500, well, maybe that is in the cards this week. We'll see. And so here you have the NQs, which, lower high, lower low, potentially what looks like a lower high. And when I say, can it hold up here? So far, Charlie, it's just an inside day. But if it can hang here for another day and takes out these highs, well, it should come up here. Maybe it goes a little further. Hard to imagine it's going to get much further than that. But again, if Apple kicks in and the others hold up, maybe that helps push the S&P up there. So I'd keep an eye on tech here, which is underperformed, and especially Apple, to see, do they show some relative strength today, or actually able to move higher. The Russell got sold aggressively this morning. It doesn't look like much on the daily chart here, but you just look at the way it went down, just so steadily. A little cleaner maybe on the 15-minute, but just lower high, lower low bars. There was a momentary stall right here as it got to this support, and now to the more significant level. You can see here on the hourly, it's bouncing up here a bit, as the others are, but clearly profit taking was being taken here. And bonds, they're all the way down here, near the bottom of that support level that we suggested was where they were going to come. And the 10-year, it's just coming to the top of it. So this is something to keep an eye on this week. It rattled the markets when the bonds began to fall and interest rates went up a couple of weeks ago, and then they went higher. And they went higher on Friday. And while Friday started down, buyers stepped up yet again. So they're rolling over here a little bit, but you want to set an alert on this, or on the yield itself, either one, but set an alert, because if these begin to spike up, logic would suggest that the markets are going to get concerned if they begin to accelerate. So while the markets are at a point where it makes sense for the upward momentum to slow down, well, if this plays along and just slows down and goes sideways, pulls back a little bit, you see the two pivot highs, well, that could be supportive of the markets actually going higher. On the other hand, if it breaks above these highs and starts moving up based on the market's reaction, when it spiked here, well, I think it makes sense that the market's not going to like that. So setting a few alerts, could be aware of what's going on. And you see oil backing off here. Look to the left, it's over at there at resistance. And with so many sectors and broader markets being up last week, while the was XLE was up a bit, OIH, the sectors, the ETFs there, OIH and XES were actually down a little last week. So looks like some money is going to be coming out of crude oil and in some of the oil stocks. So you want to be a little careful there. If you're holding on to them, they've been up pretty big this year. Maybe you want to hold them, sell covered calls, buy a put, or just take your money. Got gold trying to make the turn. Right? Buyer stepped up on Friday on the dip. It's just in a downtrend. It's at support. And do we just look to the left here? And now it needs to kind of repair the damage of the downtrend and begin to build a new floor down here. So maybe a little retest or sideways price action, but gold has reached a point where it should begin to stabilize. The monthly's in an uptrend, and silver, which looked great, that broke down and it's pretty messy here. So whether you're looking for the markets to go higher or lower, or gold to stabilize, or silver, or oil to come in a little bit, everything's at a point where it's got to digest or build. And so kind of like going into the beginning of this week, some choppy price action. What's going to move it, I'm not so sure yet, but be selective as always, and maybe trade it a little bit smaller. All yours, Dan.
All right, good morning. Just going through our opens here and some new trades. Some are gapping too much. Caesars, yeah, we had 2/3 of position left, and I saw it gapping up over 5%, and I sent that alert out a little bit ago. So let's just take our money. That's a very nice trade there. Come on, dude. All right, so we sold right here. And this was one that I found this in Barron's actually. And that's how we trade news. I don't care about the story. I just see if there's tradable opportunity. And it was a positive article, and daily, weekly, monthly look great. Bullish 1, 2, 3 here, but it's gapping up too much. I wanted to buy this over 110, so we'll watch that on a pullback. Let's see, Jose, WPG. I don't like shorting into power bars like this. It isn't a downtrend. So it's getting his sea legs back and look like it might be wanting to set up a higher low. So even though it is ugly daily, weekly, monthly, I don't like shorting into those bars. That's the reason why. FCX, it's a 1, 2, 3. It's at a prior high. It gapped up, it came in and held. So it's an idea. It's an idea. X here had earnings. We had this in last week's letter. The McGraw, this was on your list you gave me. We'll go through those later. But McGraw got a newsletter service where they were telling their people to sell a put on this today. I'm like, really? Gapping up? The entry was this 123 down here. That's when we did it last weekend, or whatever day that was. JWN. Yeah, that's a nice wide range igniting. Yeah, yeah, I like that one. I like it a lot. You know, it's slopping around in a trading range, downside shakeout here at the 50 and the 20. Yeah, I like it a lot. A 123 would be better, but it looks good. A Walmart AMC. Walmart's, it's you know, it's a sell setup. It's weaker than many. If I did anything with it, it'd just be a day trade, maybe 30-minute high, but you're kind of swimming upstream. We talked about a put spread on it on Wednesday. AMC, AMC, it's gapping up here. You know, I can tell it's gapping up to 12, so that's going to be this tail on Wednesday. It's going to be resistance. Let's see what that resistance looks like. Actually, it's gapping over this ugly red bar. So 30-minute high, I think that'd be okay. Yes, notice GME is up. You know, that's been one of the Reddit boy toys. And there's an article in today's journal that they're now playing with SPACs, trying to short them. Sure, awesome. CCL, sure. Yeah, CCL. I like this as a, it's a sloppy directional because it had this ugly reversal, but I gave it as a put spread. So let's take a look at it right now. And also jets, airlines are gapping up. We have that in our ETF letter, and a number of them are looking good. All right, CCL, this is what I had. Oh yeah, the limit. Yeah. The limit's wrong. I said so 2620. It's yeah, let's say this. That we're going to sell the April 2622. Get that posted. And we'll look at it at the open. But so yeah, that for put spread, it looks great. I mean, look at the monthly. Beautiful price void there. And I've been keeping an eye on the cruise ships because of airlines acting so well. So this was a beautiful breakout. Beautiful breakout on Friday. Here's another one I have in my list here. Look at LUV. Look at that. That's beautiful. Put that in as a new trade. Can you believe this retracement? Yeah, no, it's a new trade. We got, yeah, jets. Yeah, somebody on YouTube is saying. All right, so but anyway, but look at this. LUV, 100% retracement of the coronavirus. They're flying around with half the revenue and they're at all, recovered. It's just mind-boggling to me. Yeah, no, jets are back half in the ETF letter stopped out here, but it's a new trade. It's a new trade. CTB. I love these gap reversals, and you got two inside days, and you do have a price for it, so it's worth watching. Sure. VeriSign short bias. Yeah, yeah. Friday, it would have been a great short. You know, a little descending triangle here, relative weakness, declining 2050, but it closed with a bottoming tail, which means, you know, it snapped back. But it's worth watching if the market gets weak and we need a go-to. I always like having a couple of shorts that I'm ready to look at when I change my bias. Look at this VIAC. It's actually gapping down pre-market. This thing has been on an incredible tear this year. Just unbelievable. But these are all wide. These are all the biggest wide range bars, daily, weekly, monthly. And so that's a sign of, you know, the greed accelerating. So let's watch that for shorts, you know, day trade short and bear call credit spreads. All right, let me continue here in G. Why was I looking at NG? That might have been a typo. I don't know what NG is. Yala, Yala gapping up 2750. Bullish gap, you know, to the top end of this range right here. But it's a bullish pre-market, maybe 30-minute high day trade. This thing gapping up 28. Wow. Wow, that's a big gap. Nothing to do with it now. SPRI. Hey, John, since you have a big list there, what I'm going to do is copy it and email it to myself. And when we get a little bit more time, we'll go through them all, maybe around 10 a.m., 10:30. TY. AI, yeah, you know, it's relative weakness, but it's stabilized and it's an uptrend on the 15-minute chart. So maybe 15, 30-minute high, you know, and I dictate 15 or 5 or 30, depending on my bias on the overall markets. And I don't have a huge bias. FedEx, we're still in. I was noticing some of our open positions. BAMI, I don't know what's going on with this. It rallied to 320. It looks like another koi of some sort. Let's see, CPeng. This is the new Korean IPO. I read that it was valued at $88 billion. Crazy. Oh, and that new Stripe, the new IPO coming out whenever. The paper said they just got a valuation of $90 billion because of the 600 million investment. And that's how they impute that, obviously. It's just a simple math problem. You're going to give 600 million bucks and you say, all right, well, what percent of the company do I get? And then you divide it, and that's where they get the implied market cap. So this, you know, there's a lot of froth out there still, in my opinion, but we're going to play the froth until the charts tell us not to. All right, so that was FedEx, Caesar, we sold pre-market, AMC, we talked about Penn. Penn gapping up, also I think being reshuffled. That's a big gap. $8. Wow. After that downside shakeout, I noticed Duncan here was weak. In bearish gap. 30-minute low. If it can't bounce from here and takes out the 30-minute low, this will be a call spread candidate. And X we talked about had earnings. Nothing to do with it now. Whiskey uniform. Not bad. It came in kind of sloppy. So I wouldn't rush to it. I like JWN better. I like JWN, looks good. Yeah, yeah, they have secondary offering token. CNC alarm. This, we can do a 5-minute high on CNC is okay.